All right. So, hi everyone. Today's session we are meeting to discuss a working capital section C question. One of the students had requested me to take this up in the live sessions because the calculation part was a little bit confusing. So, let's have a look at it. This is quite a recent past paper. This was asked in September, December 2019. So, it is an important question that you people should be referring to. For example, if you're studying for 2025, your final exam is going to be in 2025. At least 5 to 7 years of past papers, if you're practicing, your preparation is going to be in a good shape. So it's good that you are practicing these questions because they are representative of your latest syllabus as well as the latest patterns that are being examined by the ACCA body. So this is the question in front of you. You can find it in your Kaplan kit. It might be there in the BPP kit also, and might also be available somewhere online because past papers on the platform, the new ACCA practice platform, they've limited the past papers that are available over there. So you can probably look up this question online, but otherwise it's there in the kits also. So no such issue in accessing these past papers. Now, whenever you're solving any section C sort of a question, what will be your first thing to do? What's your first step that you do? Yes, you have a look at your requirements. So what exactly does the question want from you? That is what we will see. So this is a 20 marker requirement, and I can see all the requirements are broken down here in front of me. Part A comes with 4 subparts. What are the 4 subparts? For 1 mark, I'm supposed to first calculate the annual holding and ordering cost of Dusty Company's current inventory management system. So just by having a look at the first requirement, I get to know that this question is asking me about the working capital area of my syllabus. So some system, what they are running right now, I have to find out the holding and ordering cost of that system. Then the same part, second requirement under that wants me to calculate the financial effect of adopting the economic order quantity as the basis of ordering inventory. So for 4 marks, I have to tell what effect is going to be there if the business switches. What are we doing right now? It will be told to us in the question. And then if we shift to the EOQ model, that is how we have to compare and contrast and find out that what will be the financial effect. Will we as a business, will Dusty Company as a business end up saving money because of using EOQ, or will they end up losing money because of using EOQ? That is what we have to say in the second part that has been asked with us. Then if you have a look at the third part again for 4 marks, it is asking you to calculate the financial effect of accepting the bulk order discount. So some discount would also be probably offered to Dusty Company, and then you have to find out what will be the effect of taking that discount to Dusty Company. And then lastly, for 1 mark, you also have to recommend with justification that which option should actually be selected by Dusty Company. So whatever numbers you work around in the part sabha, using those same numbers, you can write your comment over here that should they go ahead with that or not. And always remember, guys, whenever you're giving the recommendations that yes, go ahead, or no, do not go ahead with this, always remember that give your reasons. What will be the reason? The amount that you've calculated as the benefit or cost. So if, let's suppose, hypothetically speaking, in my calculations, I get to see a loss of $2,000. So then I will be giving the recommendation that should we be going ahead with the discount? Should we go ahead and accept it if it's giving us a loss of $2,000? What will you write? Should Dusty Company accept that? No, right? So your justification for that is going to be how you frame your sentence will be that since, or you can start off something like this, that Dusty Company should not accept the discount, and you have to give justification also. So to get the mark for justification, what we will say is Dusty Company should not be accepting this bulk purchase discount because it will lead to a financial loss of $2,000 for Dusty Company. So this is how you complete your answer by giving the justification. Don't just tell them do it or don't do it. Tell them why you should do it. Tell them why you should not do it. So this is what you people should be remembering when you write your recommendations. And then lastly, for 10 marks, the question is asking you to discuss the key factors in determining the working capital funding strategies. Now, there are two kinds of strategies which relate to working capital. One is the funding strategy that has been asked from you people. What is another strategy that relates to working capital? Working capital funding, and the other one is working capital investment strategy. Absolutely right. So working capital funding is all about, what does the funding policy tell you about? What's the difference between working capital funding and working capital investment? Firstly, are they the same? Is working capital funding policy or strategy same as the working capital investment strategy? No, they are different. So what is the difference? What sets them apart? Tell me, what sets them apart? You can unmute and answer as well. What's the difference between funding and investment strategy? Okay, so Trisha is telling the different types of approaches. It can be aggressive or conservative, but this is the type. What exactly are you deciding under a funding strategy or under an investment strategy? We discussed this the last time also, guys. I expect answers. Yes, Yashu is exactly right. Firstly, when you talk about the funding strategy, funding is where the money is going to come from. So if, let's suppose, you hear entrepreneurs saying that I'm looking for funding for my company. So funding means they're looking for sources of money. So the way you decide where the money is going to come from, how much money will come from which source? Will it be coming from debt? Will it be coming from equity? If it comes from debt, will it be a short-term debt? Will it be a long-term debt? That is what you decide as a part of the funding strategy. And then if you talk about the other hand, which is the working capital investment policy, the name itself is telling you investment. So how much do you invest in current assets? That is what is the part of your working capital investment strategies. So if you invest too much in your working capital, you are called to be conservative or aggressive. If you are investing too much in working capital, too much of current assets you have, will it be conservative or will it be aggressive?
Conservative.
Conservative. Kia, think again. Aggressive will be where I want to maximize my profitability. So when I want to maximize my profits, keeping cash does not give me any profits. If I want to grow my money, I have to put it into different investment avenues. So my liquidity will be bad, but my profits will be good. That is what I do in an aggressive working capital investment strategy. Right? So this was a quick recap of the two kinds of strategies that you people have studied. This question, you have to talk about the funding strategy. So where is the money going to come from? Will it come from long-term sources? Will it come from short-term sources? That is what you have to tell for 10 marks over here. You have to discuss the key factors that you as a business will be considering when you are deciding where to fund your working capital from. And now also, before we move forward, can you people let me know for part B, am I supposed to write a case study linked answer or a general answer has to be written here? What sort of an answer? General answer is needed. And reason being? Reason being? Company name is not mentioned. Absolutely right, Shafika. All right. So now, can we go to the case study? Is there anything that bothers you about the requirements? Anything that's not clear here that what you're supposed to do? You're all good till here? Okay. Yashu says, can you explain B part? B part we will be discussing. Do you want to know about the requirement or do you want to discuss the answer, Yashu? The answer we will be discussing in detail. I was just giving you a quick recap of what the different strategies are. First, we have a funding policy, then we have an investment policy. So we'll come to the answer once we are done with solving the part A. Okay. All right. So now let's head to the case study. Case study is also not very lengthy. Now, before I go into the case study, what I'll do is I've created a separate page for you people over here, so that just in case if you want to come back to refer to the calculations, you will have this spreadsheet to come back to. I am solving part A, and the first part is I want to calculate the annual. Let me see if it allows copy paste. Yeah, so this is what I want to calculate right over here in the first place. Whatever current system that they are following, I want to find out two costs. First is the holding cost and second is the ordering cost. Now, let's have a look at the information that is given to us. Dusty Company wishes to improve its working capital management as part of an overall cost-cutting strategy to increase the profitability. Two areas the company has been considering are working capital funding strategy and the inventory management. So these are the two areas which the question is going to test you about: inventory and then working capital funding. Dusty Company currently follows a policy of financing working capital needs as much as possible from long-term sources of finance such as equity. So when they are financing a lot of their requirements as much as possible from long-term sources, are they aggressive or are they conservative or are they moderate? I want answers from everybody. We've just revised this. Others, if you're using too much of your funding coming from long-term sources, are you aggressive, are you conservative, or are you moderate? You're conservative. Why? What is the reason behind it? How can you explain that this is a conservative strategy? Who is a conservative person? Yes, a conservative person always wants to avoid risk. They do not mind paying any extra, but they do not want to take any risk. So what do is, Bhargav, here you're talking about the investments in the current asset. Right now, the question that we are dealing with, this is the funding strategy. So these are two different things. Where you invest is different. Where you get your money from, that is different. So here I am getting my money from long-term sources of finance. What does that mean? That I, as a person, I do not like taking a lot of risk. I don't mind paying anything extra. So when it comes from funding, I have two options available. Either I go for a short-term loan or I go for a long-term loan. Now, usually in any economy, where are the interest rates going to be higher? Will it be higher on a short-term loan or a long-term loan? Interest rates will be higher on long-term loans. Why? Because the longer the duration, the more the risk. So the person who is investing into the debt has to be compensated with a higher return that comes in the form of higher interest. Absolutely right. So if I am a conservative person, I just don't want to take risk, but I don't mind paying anything extra. So an aggressive person will be the one who likes to take all of these risks, and he wants his profits to be maximum. So when I want my profits to be maximum, I will be going ahead with the risky items. But here, when I am going towards the long-term sources, I am conservative. I'm playing safe. I do not mind paying extra money as interest, but I want the safety. I do not want to take a lot of risk. So the strategy that the company is currently following, we can say that because they're using long-term sources of finance more and more as much as possible, that is how we get to know that the company is using the conservative approach. Then the question further tells you that the company has been considering its inventory management and has been looking specifically at component K. Any doubts, anything to discuss till here? We all know that there are two areas which are going to be tested. Firstly, the question is going to ask me about inventory management. Then it is going to ask me about the financing strategy of the company. And lastly, it tells me that I'm using long term. That means I get to know about the management, that these are people who do not like taking a lot of risk. They do not mind paying extra, but they just don't want to take any risk. Right. Now, moving forward, they are telling you the current position. This is what will help me find out the very first part of my requirement. The current position is such that Dusty Company purchases 1.5 million units of component K each year and consumes the component at a constant rate. The purchase price of component K is $14 per unit. The company places 12 orders each year. Inventory of component K in the financial statements of Dusty Company is equal to the average inventory of component K. The holding cost of component K excluding the finance cost is 0.21 per unit per year. The cost of ordering a component K is $252 per order. So as many number of orders I place, this is the cost that I have to pay for placing one order. So the more the orders, more I will multiply with the number of orders. So here in the first requirement, it was asking me to find out my annual holding cost, and then I had to calculate my annual ordering cost. So can you people let me know, when I talk about my annual ordering cost, how can I find out my annual ordering cost? We'll come to the holding costs, Annette, but let's first discuss about our ordering cost. When you're discussing about ordering costs, you know that the formula is number of orders that you're placing multiplied by the cost that the money that it costs you per order. So I know that my cost per order is directly given to me in the question as 252. So my cost per order is given to me as 252. Then I now just need to find out the number of orders. So here, does the question tell you anything about the number of orders? Do you know how many orders are they placing? 12 orders, it is given to us. So the cost of ordering, annual cost of ordering, it's very simple to calculate. We simply have to take the product. One time it costs me $252. I place these 12 times. That means this is the amount of money that I will have to spend from my pocket if I want to place 12 orders in the whole year. Any queries in the annual ordering cost? This is very simple till here. Yes? Okay. Now let's talk about the holding cost. What have you people learned about the holding cost? How do you find out the holding cost annually? EOQ divided by 2 multiplied by the holding cost per order. Here they are not using the EOQ model. So how do you find out the average inventory? Their current order size. They are telling you that they are placing an order of these many units over the whole year, and they are placing 12 orders every year. So using this information, can you people find out how much is the number of units that they order in one go? Yes, we can simply divide and find out. So we can say number of units in one order, that is going to be equal to 1.5 million divided by 12. So this gives you 125,000 number of units. And guys, basically annual holding cost, I have learned that the formula is I have to take my average inventory and then I have to multiply it by the cost of holding one unit for 1 year. This is the formula that you have learned about the holding cost. Yes? Right. So now if I want to know how much is my average inventory is how much you order in one go divided by 2. But how many number of units you are ordering in one go? Is that directly given to you in the question? How many units you place an order for in one order? That's not given. So we are given with information that can help us find that out. So how can I get to know? I know and realize that I will be needing 1.5 million units in the whole year, and I place 12 orders. And in every order, we are assuming that because they are telling us that we are ordering at a constant rate, I know that in each and every order, I will be placing the same number of units. So if this is the total number of units and this is the number of times that I place an order, if I divide 1.5 million by 12, I will get to know how many units are they placing an order in one go. You can double check your workings also. If I place an order these many times for these many units for 12 times, I will have exactly 1.5 million units at the end of the year. This is what I wanted. Yes, this is how you can back check also. Right? Okay. Now this is my number of units that I'm ordering in one go. So now my average inventory will be my order quantity divided by 2. So this is the average amount of inventory that remains with me in my business. Now what do I know further? That they are telling me that the cost of holding has been given to us as 0.21. Let's read the further information also. Dusty Company wishes to investigate whether basing the ordering of component K on the EOQ will reduce costs. Then you have information about the bulk order discount, and then further it tells you Dusty Company has no cash, but they have access to short-term finance via an overdraft facility at an interest rate of 3% per year. The overdraft stands at this much amount of dollars right now. So here when they are asking you to find out your holding cost is directly given to us as $0.21 per unit per year. Now they have not specifically asked us to include the finance cost. If you want to include it, that would also be considered correct, but if you do not want to include the same, that will also be considered as correct. So just to avoid any complications over here, I will simply take 0.21 per year per unit. So this is my average inventory. So my annual holding cost is going to be average inventory multiplied by 0.21. So 13125, this is the amount of money which I spend over my holding cost. And then the question asks you to find out the total of holding and ordering. So you can just do a sum of them at the end, and you can say that this is the current inventory management cost. So current inventory management cost. This is the amount of money that it costs Dusty Company to run the inventory management system which they are doing. Right? One more method, if you people want to include for the finance cost also, finance cost is 3% per year. So on your average inventory itself, this number that you're taking, 62,500, you can just take 0.21 is given to you excluding the finance cost. So just include 3% more to this. So multiply this with 1.03. This will give you this much. Now, in this figure, multiply your average inventory. This way also, if you people calculate your annual holding cost, this will also be considered correct. Although it was not outrightly told to you to include the finance cost. So both of the options are going to be marked as correct. Whether you want to take it simply at 0.21 or whether you want to inflate it by 3% interest that you're paying over the financing, that is also something which you can do over here. Any doubts? I think someone was trying to unmute.
Oh, okay, ma'am, that was me. I wanted to find out, I got a bit lost there where you got the 125,000 and now it went to 62,500. Yeah, okay.
All right, so I'll
I
tell
got
you
a bit
about that
lost from
again.
the
This is my order quantity. You're with me till here,
yes.
right?
Why are we saying it's the order quantity? I thought they say they ordered 1.5 units per year.
In the whole
So are
year.
we now doing an EOQ to put that?
No, EOQ will come in the next part. Here we are talking about their
Okay,
current
here.
system. So the current system is
Okay.
telling us that every year we are ordering 1.5 million
Yes.
number of units, and I'm
Yes.
placing 12 orders every year. So that means I want
Okay.
to find out how much quantity I'm ordering in one go. So if I place 12 orders and every order I'm ordering the same number of units, how can I get to know how many units am I ordering in one go? So this is the total which I have at the end of the year, and I order it in 12 installments. So how much would
Yes.
one installment be? So I'm using the
Oh,
unitary
yes.
method,
Okay. No.
right? So with this, I
Okay.
get
So
to know,
so this is the batch size.
yes,
That
this is the
becomes the
batch
batch
size.
size.
Yeah,
Oh,
definitely.
okay. Okay.
Yes.
Okay.
And then how
No,
do you
it's
find
okay.
out the
Thank you so
average
much. I'm
inventory?
clear.
Average inventory is
I
order
divide it
quantity
by two.
divided by 2. Absolutely. Absolutely right.
Okay. Thank you.
You're welcome. Abdul Rahman is asking about the finance cost. No worries. So see, finance cost is it is telling me that overdraft facility is being used by Dusty Company because we don't have any cash. That means if I want to buy inventory, I don't have any money with me. How do I get the money to pay to my suppliers? I borrow it from the overdraft. So technically, Abdul Rahman, till the time that my inventory remains with me in my business, till the time I hold my inventory, I technically also pay interest to the bank over the overdraft that I was using to buy that inventory in the first place. So that is why I am saying that 0.21 must be there about the storage and the warehouse cost, but the extra 3% that I'm bearing because of the interest that I have to pay, that is also the cost that I bear to hold the inventory with me, because till the time the inventory lies with me, I have to keep paying the interest. I'll only get the money when my customer takes the goods from me. I sell the goods to my customers, and then the customer eventually makes the payment to me. So the 3% interest that I'm paying while the inventory remains with me in my storage house, in my warehouse, that is also something which you can argue that should be included in the cost of holding your inventory. So that is why what I did is 0.21 is the cost of holding, and then what you can do is you take for the 3% extra that you have to bear over keeping this inventory. The 3% which you should be taking over here should be about the purchase price. So what you should rather do over here is 0.21 is the storage cost, and then you take 3% of the purchase price, because the purchase price is what you will borrow in the overdraft. So per unit $14 is what you're paying. So this is how much it is going to cost you, including the interest that you are bearing over $14. Okay. Is this part clear now? All good, guys? Yes, then you multiply with average number of units. That's what I've done over here. And yes, Shafika, both will be marked correct until and unless they specifically tell you to do one of the things. If they tell you to specifically, categorically, it's mentioned in the question that ignore financing cost, then you will simply take 0.21 multiplied by the average inventory. And if they categorically mention to you that you have to include the financing cost also, then you take 0.63. The other one will be marked as incorrect. You'll lose some part of the marks in if anything is specified. But if nothing is specified, you can use whatever you want to, and you can leave a footnote, right? So if let's suppose I'm using just the holding cost, so I will assume, I will say that it is assumed that holding cost does not include the finance cost. So I can just give this footnote just to tell my examiner that I know that if finance cost also was to be included, I know how to include that in my answer. So I'm just letting the examiner know I know both of the techniques. Whatever you ask me to do, I will do that for you. Okay. So this is how we will frame our answer for the first part. This was a requirement worth 1 mark. Abdur is asking, why do we calculate 3% on the purchase price? See, Abdur, you do not have any cash at the moment and any money that you want to use to buy the inventory. Now, when you want to get the money for buying the inventory, actually the money that you have to pay to your supplier, how much is per component costing you to buy? If you want to buy one component K, 1 unit of it, how much money would you need to borrow from the bank? $14. So how much interest will you have to pay? 3% of $14, right? That is why we are taking 3% of the purchase price. Okay, right. Now proceeding towards the second requirement, which wants you to discuss the financial effect of adopting the economic order quantity. So what you do over here is second part, financial effect of using EOQ. Now here, the very first step would be, guys, what do I do when I want to use EOQ in my Dusty company? What would be my first step? What would be my first step, guys? Yes, I will find out the EOQ. Absolutely right. Okay. So it is telling me Dusty Company wishes to investigate whether basing it will be good to reduce the costs. So what I'll do is I'll just open your FM formula sheet to have a quick look at the EOQ formula. Even if you people don't remember, this is where you will find out on the formula sheet. It is 2 into the cost of ordering into the annual demand. So I have every information given to me over here. This is my numerator. 2 into my annual demand was 1.5 million number of units into I have to take the cost of ordering. Cost of ordering is given to me at 252. So I multiply this with 252. This is my numerator. Then if you have a look at the formula for the denominator wants you to take up the holding cost. So the holding cost was also given to you directly as 0.21. And then this whole figure, you have to take the square root. So you can simply raise it to the power of 1 by 2. So this is the EOQ. That means if the business wants to use the EOQ model, how many number of units should they place an order in one go for? How many number of units should I order in one go?
60,000.
60,000. Absolutely right. So this is my new order quantity now. So because there are nothing specific mentioned to me with respect to any sorts of discounts, I can just simply compare how much money is it going to now cost me to hold and order this particular inventory. Now, if you have a look over here, I will first find out the ordering cost. So I can just copy paste the format from here. Annual ordering cost. So cost per order will remain the same as 252. Now guys, how many number of orders will I need? I need a total of $1.5 million number of units and 60,000 I'm placing in one go. So how many orders do I need to place now? How many orders do I need to place now? 25. How do you people get to that? The annual demand of 1.5 million divided by your order quantity of 60,000. That means you will have to place 25 orders now. So how much would it cost you? $6,300 would be the cost that you have to bear if you want to order the inventory in this particular quantity. Right? Are you all with me till here? Ordering cost is good? Okay, now let's talk about the annual holding cost. So when I talk about the annual holding cost, I was given with my, I can just copy paste this format again. So my order quantity now is 60,000 units. That means how much would be my average inventory? My average inventory will be now 30,000 units. And then when I multiply 30,000 with 0.21, I come to 6,300. And this is how you people can verify also. How can you verify if your answer in EOQ is correct? Yes, ordering cost will exactly equal the holding cost. And then once you people are using the EOQ model, will you people see any changes in your inventory also, the average inventory that you have? Yes, average inventory will also change. Firstly, if I talk about the number of units, so change in inventory units. Earlier, my average inventory used to be these many number of units. Now, my average inventory is 30,000 units. So my average inventory has actually fallen by 32,500 units. Now, if I talk about the change in inventory value, so this is the number of units. And then how much does per unit of inventory cost you? How much does per unit of inventory cost you? It was given to you in the question. $14 was the purchase price, right? I'm asking about the cost, analyze. So here it's given to you as the purchase price is $14 per unit. So if I want to find out how much would be the worth of 32,500 units, it will be equal to 32,500 times 14. So this is how much my inventory has fallen or increased in value. Has my inventory fallen or has my average inventory increased? Has my average inventory fallen or increased? Earlier, I had an average inventory of 62,500. Now I have an average inventory of 30,000 units. So what has happened? Has it been an increase or a decrease in the average inventory? It's fallen. So if I now have lesser amount of inventory on average, will I be borrowing more money from overdraft or will I need to borrow lesser money from overdraft now? Lesser. So that means if I borrow lesser, what do I have to now reduce else? What comes with overdraft?
Finance.
The interest or the finance cost. So now that I'm borrowing lesser money, I also have to bear lesser interest. So how much saving do I get in finance cost? Saving in finance cost is going to be equal to, this is the amount by which my inventory has reduced. So 3% of this amount, 13,650, this is the amount of money which I will end up saving because of this particular model being implemented. So overall, if you people see how much saving will we be having, you can find out the total, or you can say, if you just compare the total cost, earlier your total cost came out to 16,149. This was the cost of your totals. And then what you can do is you can also give a comparison to the holding and ordering cost, total holding and ordering cost. 6,300 plus 6,300, this is your total ordering cost now. So earlier it used to cost you these many dollars. Now it is costing you these many dollars, 12,600. So now your cost is also reduced and then you're saving finance costs additionally. So you can find out the overall saving, overall benefit will be, earlier you were spending this much amount of money. Now you will be spending 12,600 and then further you will be having a saving of 13,650. So 17,199. This is the overall financial effect because of implementing this particular policy. So yeah, I'll just repeat the whole thing again. Have a look here. You were all with me till the current inventory management cost. First part was all understood by everybody. First part was clear to everyone? Okay. Then what did we do is we had to find out what impact will it have when we are using the EOQ model. So my first step was I found out how much is the EOQ. Using the EOQ formula, I found out that the EOQ will be 60,000 units. What does that mean? In every order that I place, I will be placing an order for 60,000 units in one go. Then I found out my annual ordering cost. How do I calculate that? I know my cost per order is 252. And how do I calculate my number of orders? In the whole year, I need to have 1.5 million units with me. And in one go, I'm placing the order for 60,000 units. So by using the unitary method, I find out that I will have to place 25 orders in the whole year so that at the end of the year, I will be able to fulfill the demand of 1.5 million number of units. And then I find out my annual ordering cost, which will be the product of the cost per order and the number of orders. So this is how I find out my annual ordering cost. Now, when it comes towards the holding cost, what I'll do is I am not including, Abdur has also asked this question that can you show the number of orders? So number of orders is clear to everyone. How did we calculate the number of orders? Okay. And then the second part of your question, you were asking me, why are we not including the financing cost? So I am not including the finance cost because I will consider it later at the end. Okay. So here, when I talk about the holding cost apart from the finance cost, how many number of units am I going to be holding here? My order quantity, because using the EOQ model, I got my answer as 60,000 units. I get to know that each order, I'm placing an order for 60,000 units. That means how much will my average inventory be? My average inventory will be the order quantity divided by 2. So 60,000 divided by 2 gives me 30,000 units. This is the average inventory which will be there with me in the question. And then I simply multiply the average inventory with the holding cost that is given to me per unit in the question. So this is how I find out the annual holding cost which the Dusty company will have to bear if they go ahead to implement the EOQ model. So how much do these both costs total to? 6,300 was ordering and 6,300 again is the holding. So you just add both of these figures together, 12,600. This is the total amount of money which is going to be there when it comes to ordering and the holding cost. Any queries still here? And it is asking if I write EOQ assumes OC is equal to HC instead of computing the HC, will I lose marks? Definitely, you will end up losing the marks which are there to show the calculations for holding costs. You cannot just simply say that EOQ means that both of these costs will be same, so I'll not show the calculations. No, this is not how it will work. You'll have to show the entire way you've calculated both the holding as well as ordering costs. Okay, everyone is with me till here? Yes? Okay. Now let's talk about how much of change is going to be with respect to inventory. So if you people do not understand this or if you're finding this complex, have a look at this manner. So earlier, your average inventory used to be 62,500 units. What I'll do is I'll draw a table over here. I'll compare two things, okay? My old scenario and then my EOQ scenario. So if I talk about my old scenario, my average inventory, which I had calculated above, my average inventory used to be 62,500. And if I talk about my EOQ scenario, my average inventory is now 30,000 units, right? So far, we've computed exactly what we had done in the parts above. I've just written it in this table. Now, if earlier I wanted to borrow money to have 62,500 units in my average inventory, how much money would I have to borrow from my OD to get 62,500 units from the market? How much money would I need to borrow? This is the number of units. If one unit costs me $14, 62,500 units will cost me 62,500 times 14. And similarly, 30,000 will cost me 30,000 times 14. So this is the money to be borrowed from my overdraft, right? Is everyone with me till here? Yes, this is the money that I'll have to borrow. Now, on the borrowing, do you have to bear any sort of interest? On the money that you borrow, do you have to bear any interest? Yes. How much is that interest? 3%. So earlier, how much money did you have to bear? So it was 3% of the amount that you had borrowed. So earlier you had to pay interest worth $26,250. Now you have to pay interest worth $12,600. So is this any good or bad thing for the company? Earlier you had to pay $26,000 as interest. Now it is $12,000 as interest. Is the company good or is it in a bad position? Because of the EOQ model? you end up saving finance cost. So how much finance cost do you save? Saving in finance cost is going to be what I used to pay earlier versus what I will pay right now. So 13,650, this is the amount of money which I will end up saving as part of my finance cost. This is exactly what I showed you people earlier also. This calculation was not as detailed, so maybe this calculation would have helped you better. Do you now, every one of you, understand how I am saving finance cost? Okay, great. So now I can just draw a comparison. So,
Ma'am, sorry.
yes, and
Sorry,
guys, go ahead.
Money to be borrowed for OD 875 and 420. Where did that come from? Sorry.
So this is your average inventory, 62,500
Yes.
number of units, right?
Yes.
Now,
Yes.
one unit, if you want to go and purchase from the market, how much money do you have to pay to get one unit?
$14.
So that means if you want to have 62,500 units in your inventory, how much money would you need to borrow?
Okay, you multiply that. All right. Thank you.
Yes. Okay. So now what you can do is to find out the overall benefit. Overall benefit will be 13,650. You can as it is take because you've already done the comparison. And then for the other benefit is how much you were paying earlier in total. In total, your cost was coming out to 16,149. Now your cost is going to look like 12,600. So firstly, you saved this much money, and then you saved with respect to the finance cost also. So this is 13,650. So overall, the net effect will be you will as a business end up saving roughly $17,200. So this is how you will answer for the second part of the question. Whichever method works for you. If somebody was able to understand this shorter way of working, you're more than welcome to use that. If you were able to understand the slightly longer, slightly more detailed method a little bit better, then you're free to use this method. Whichever is more easier for you to remember, easier for you to apply on your own, you can use that. Trisha says, can you repeat the overall benefit? See, if this is confusing you, again, I can show you an easy presentation for the second part as well. So what you can do is in the current system that you were having, just include the finance cost separately. So in the current system, you have found out the finance cost was 26,250. So you can take the overall cost in the first method. I'll just insert one row here. So overall cost under current management will be the holding cost that I bear plus the ordering cost that I bear plus the finance cost which I have calculated using the old scenario. So this is the total amount of money which I am bearing under the current system of management. Then simply calculate it for the EOQ scenario also. So total cost under EOQ scenario, that will be the ordering cost plus the holding cost and plus the finance cost, which is 12,600. So now you can bold this total also. And now if you want to come to your final answer, final net benefit, just draw a comparison between the two figures that you have put in bold. So subtract this and you will get to the same answer. What you did is just add all of the holding, ordering, and finance costs under the first case. Do the same for the second case and then draw a comparison. So if the business uses the current system, it will cost them this much. If it uses the new system, it will cost them this much. And the difference between them will be if they use the EOQ model, they will end up saving $17,199. So what would be your suggestion, guys? Should Dusty Company go ahead with their current system only, or should they go ahead with the EOQ model? What will be better? Usage of EOQ will be better for the company. And what reason will you give them for the same? How will you justify this? How will you justify this? Yes, exactly. That this will help Dusty Company have a saving of $17,199. Absolutely. So this was your answer for the second part of the part A. Should we head to the third part now? You're all with me till here? Yes, let's move to the third part now. Okay. Third part is we have to find out the financial effect of accepting the bulk order discount. Now here the supplier of component K has offered Dusty Company a discount of 0.5% on the purchase price of component K, provided the company orders 250,000 units per order. So if you are placing these many units of order in one go, then the supplier is willing to offer you a discount that is worth 0.5% on the purchase price. What was your purchase price? Remember? What was the purchase price per component K? $14. So you will get a 0.5% discount on these $14 of your purchase price. So now how can you do your workings over here? You will find out how much your inventory costs are going to look like under if you go ahead with the discount. So what you do is this is your calculation for the third part, and you can copy paste the requirement itself, financial effect of accepting the bulk order discount. So I copy paste this over here, and then I find out that if the business goes ahead with the discount, what are the different costs going to look like? So first, if I find out how much would probably be my ordering cost. So if I find out my ordering cost annual, how much is that going to be? I need to know the number of orders, and I need to know the cost per order. Cost per order I already know is $252. Now guys, if the supplier is giving me a discount of 250,000 units if I order in one go, how many number of orders will I have to place? Yes, absolutely right. Take the total demand that you have, that is 1.5 million, and divide that by 250,000 number of units. So that gives you 6 orders which you will have to place in the whole year. So that means your annual ordering cost is going to look something like this. Your annual ordering cost will be $6 times 252, which is $1512. This is how much your ordering cost will look like. Now, if I talk about my holding cost. So holding cost will be the average, or you can say the cost of holding one unit for 1 year. So that is given to me already as 0.21. And then further, I have to multiply this with my average inventory. What is the formula for average inventory? You have to take the EOQ divided by 2. So the EOQ that you have is right now, the order quantity will be 250,000 units per order. So 250,000 units will be my order in one go. If I divide this by 2, this will give me my average inventory. So my total holding cost will be 0.21 times $125,000, which is going to be 26,250. So this is what my holding cost is going to look like. So now I can find out the total of my holding and ordering cost, or I can also find out the finance cost also here itself. How do you find out the finance cost? Finance cost is also always taken on the average inventory value. So if your average inventory is 125,000, it's 125,000 number of units, how much would it be in terms of value? If one unit is worth $14, how much would be the worth of 125,000 units? How can I find out the worth of my inventory? Multiply this by 14. So I will know how much this inventory is going to cost me. So that means the amount to be borrowed from the overdraft will be these many Then I bear a 3% interest over my overdraft. So into 3%, this is the amount of finance cost which I am bearing with this scenario. Then you can now find out the total of all of these costs. So the total cost, if we do go ahead with the discount, is 1512 plus 26250 plus 52,500. This is the total cost if I go ahead with the discount. And then versus, you can compare it with the overall cost that you have under the current management system. So under the current management system, this is the cost that you are bearing. You just have to see whether the number has been correctly copy pasted or not. This is the number. So this is the cost that I'm bearing at the moment. Now, if I want to find out how much of the effect is going to be there, can I just go to the final answer, or am I missing something else? Can we calculate the finance cost by this method too for the first part? Yes, absolutely. That will also be correct, Abdur. Yes, Shafika is absolutely right. We are missing on the purchase price. Why did we go for this particular arrangement? Because the supplier was giving us some discount. So we will also end up saving some money because of the discount. So before you can come to the total, you also have to consider one more thing, that you will end up saving some money because of the discount. So saving due to discount. Now, if earlier you were buying a component for $14 was the purchase price, now you're getting a 0.5% discount. How much money would you be paying on this now? Or how much discount will you end up getting? Let's take it at that level. How much discount will you get per unit? Yes, you will simply take 0.5% of the $14 figure. So this is the amount of discount that I'm getting on each unit, and arise 13.93 will be the money that I have to pay per unit. Now here I'm seeing how much discount will I get. So discount is 0.5% of 14, and I will get this discount over how many number of units? How many number of units am I buying in the whole year? 1.5 million. So now you multiply the per unit discount with the total number of units. So this is the total saving which I will have because of the discount. So now these were all costs, and then I will end up saving $105,000. So now my total cost of inventory is going to look something like this. And now when I want to find out the difference, or if you don't want to add this over here, just let it be. Compare these two numbers first. These two numbers, this is the money that you will have to bear, right? If you go ahead with the scheme, and then this is something which you're bearing already. So this gives you these many dollars of extra cost with this method, but then you also end up saving some money. So we had calculated the saving due to discount. So the saving due to discount was $14 into 0.5% into the number of units. So now this is the extra cost before discount, and then when you consider the discount benefit, you can find out a net saving because of the discount. How much will be your net saving? It will be the difference between both of these figures. This will come out to $67,137. So this is the amount of money which you will end up saving because of the bulk order discount that you are thinking to accept. Okay. Any doubts here in this part?
Sorry, ma'am, how did we get to the total cost of 8262?
Okay, so here you have just taken the total of all of the costs that will be there with the discounted scenario. So this is your ordering cost, then I took my holding cost, and then I took my finance cost.
Oh, okay. I think that 1.5, I hadn't seen it. Okay, thanks.
Yes. Just give me one moment. Okay. Madhumita is asking, can you please repeat from total cost? So Madhumita, just now I told how the total cost was arrived at. Under the discounted scenario, I first pay the ordering cost, then I pay the holding cost, and then I pay the finance cost. So this is the total amount of money which I am bearing as the cost when I choose the discounted model. And in the previous part, I had calculated my total cost under the current system. Under the current system, I had holding cost worth this much, ordering cost worth this much, plus the finance cost which I had calculated over here. So I added all of these numbers together. This gave me the current cost which I am bearing. Now, if you draw the comparison right now, the current cost that you have to bear is 42,000. If you go ahead with the discount, you have to bear more cost. So does it make sense before the, if you have not considered the discount so far, does it make sense to switch to this model? Right now, you're bearing a cost of 42,400. If you go ahead with the discount, you bear a cost of 82,262. So right now, it does not make much sense. But if you consider the discount that you are getting, after considering that, you still end up saving 67,137. So that is why we say that if the business goes ahead with the bulk purchase discount, they are going to end up saving some money, and that saving will be worth $67,137. Abdul Rahman, which one do you want me to show the finance cost, the current scenario or the discount scenario? Amount to be borrowed here. Average inventory multiplied by the cost per unit. If I want to borrow 125,000 number of, if I want to buy 125,000 number of units, I will need these many dollars to buy this inventory from the market. This is the amount that I'll borrow. Anything else that you people want to ask over here? Anything that bothers you in these workings? All good, guys? Numerically all clear?
Ma'am, what's the total cost?
Total cost is the discounted scenario wali cost. Yes,
I'm
it'll
not
be.
getting this.
So Bhargav, I'm just seeing that how much will be, you can say, my overall cost under the discounted scenario. So here with these workings, I started off with, if I go ahead with the discount, how much these three different costs are going to look like. So one by one, I calculated that my ordering cost will look something like this. My holding cost will total up to this figure. And then my finance cost will look like this. So I've just done a total of all three of these numbers, ordering cost, and then I added the holding cost, and then I added the finance cost. Just the total of this is the total cost under the discounted scenario. You can see
Yeah,
here.
got it.
Okay.
And what's
Uh,
about under management cost, current cost under management?
Overall cost under the current management.
Yeah.
This number I brought from our workings above. So from our workings above, again, I had taken the holding cost which we had calculated, the ordering cost which we had calculated, plus I showed you people separately how you will calculate the finance cost. So how much was your average inventory taken as per the value of that average inventory and then multiplied by 3% to find out the finance cost.
Acha. It's the difference between the old scenario and EQ scenario, basically.
Sorry?
Is the difference between the old scenario and EQ scenario?
I have just jotted down the totals first and then I have calculated the difference.
Okay. No
Yeah,
problem.
so these are both of the totals here at the bottom, and then I find out the difference here this way. Okay. All right. Anything else with respect to the numbers, guys? Are you clear now? Yes? Okay, great. So now we proceed further to where they have asked us to give a recommendation. Uh, okay, Anirise, you can definitely practice this question on your own once. And if you feel stuck, you can again come back to the video. I'll be processing the recording soon. And then otherwise, you can always come back to me and I can help you if there's anything specific. Okay. All right. So now coming to the fourth part where you have to recommend with justification which option should be selected by Dusty Company. So both of these scenarios we have calculated that if we go ahead with the discount, it gives us a net saving. And if we go ahead with the EOQ also, then as well, it is giving us a net saving. So what we will do is we are going to draw a comparison and we will say that if the business has to choose between only one, should we go ahead? Either we will go ahead with EOQ, then we will place the order of 30,000 units or 60,000 units in one go. And if we go ahead with the discount, we'll have to place the order of 250,000 units in one go. So which out of the two options do you people think will be better for the company? Should they adopt EOQ or should they order as per the discounted quantity? EOQ gives them an overall benefit of 17,199, and if they go ahead with the discounted scenario, they can save $67,000. So as a business, what amount of money would you like to save? 17,000 or 67,000? 67,000, isn't it? So should the business choose for discount or should they choose for EOQ model? Yes, they should go ahead with the bulk discount. So what your recommendation will look like over here is Dusty Company can save 17,199 if they adopt the EOQ model, and they can save $67,137 if they order as per the quantity discount. So we will say that it is recommended that Dusty Company orders as per the bulk discount quantity, since this will help Dusty Company obtain a greater amount of saving. So with this recommendation, you people will be able to score the 1 mark that is available for giving the recommendation with the justification. So I've showed both of the numbers, what will be the financial consequence with EOQ, what will be the financial consequence with the quantity discount. And then at the end, I've given the recommendation that they should go ahead with bulk discount. And then the justification has also been given, that the justification, the reasoning is that because it gives you a higher amount of saving. So this is how you will be able to secure the 1 mark which was available for this recommendation. Now going forward towards the last requirement that pertains to 10 marks of the question, where you have to discuss the key factors in determining the working capital funding strategies. So if you people have to make a decision, where do you get your money from? What all factors will you consider? Should the money come from debt? Should the money come from equity? Should it come from long-term sources? Should it come from short-term sources? What are a few factors that you people will consider? Think of a few points, put them down in the chat box. Let's see how many can we discuss together before we go to the answers. Okay, the management attitude towards the risk, duration. Okay, the type of assets that I need. Are they more of permanent assets do I need? Are they more of fluctuating assets that I need? What else? Accessibility of funds, very good. Not every business will be having the access to all different sorts of funds. Maybe some long-term loans may only be available to a company if they are a good company, because long-term loans are risky for the lenders also. Very good points that you people are coming up with. Anything else that you can think of? Okay. Whenever you people have to get any source of finance, does that source of finance come for free to the company? Or does the company have to bear any cost on it? Money is never free, right? You have to bear the cost of that money. If you take any debt, you have to pay interest. If you go with equity, you might have to pay dividends. Do both of these sources of finance have the same cost? Is the cost of debt same as the cost of equity? No. So won't you also consider which one to choose? Will you be, as a company, would you really prefer to go for those sources of finance which are more expensive? No, right? You would want to go for funds which are obtainable at a cheaper price, right? So, what all factors can you talk about? You can create subheadings over here because this is a 10 marks worth of requirement. So 5 points at least bare minimum you people should be writing. If you write more than 5, it is better for you only, because just in case you end up scoring lesser than 2 marks in one of the points, the other points can get considered. So permanent and fluctuating current assets, this is the first thing that you can talk about. How will you explain this? How will you explain this point? With permanent and fluctuating current assets, where should the permanent current assets be financed from? Yes, long term. And where should the fluctuating current assets be coming from? From the short term. Absolutely right. So what you will say over here is that whenever you want to find out about the funding strategy of the company, it's very important that you have a distinction between the kind of current assets do you have. So do you have more of permanent assets, or do you have more of the fluctuating assets? You can start off with a little bit of explanation of what are permanent current assets, what are fluctuating current assets. So permanent current assets, you could say that these are those assets which stay with the business for longer than the other assets. So example could be any buffer stock, any minimum amount of trade receivables, any precautionary cash. So this is something which you keep for a longer duration of time, and this should be coming from a long-term source of finance preferably. Then you can give a little bit of definition about the fluctuating current assets, that these are those assets which keep on changing with fluctuations, variations in the business. So these can be financed using short term because the business needs them only for a shorter duration of time. This is the first subheading that you people can talk about. Then the second subheading that you people can discuss is about your costs that are associated, costs associated with different sources of finance. So now here you can discuss how the cost of equity and the cost of debt is different. The cost of long term and the short term finance is different. So if you talk about short term and long term, which finance is going to be more expensive, guys? Long term will always be more expensive because of the more risk being attached with a long term loan. So in case I am having a business where the long term and short term, both sorts of finances are what I require, then I'll have to consider that if I need the money for a longer duration of time, let's suppose I'm entering into a loan agreement, I have to fulfill all the things which I'm agreeing in the document. I have to pay the interest on time. I have to give this in noting that I have to give this in written that I will not default on the risk. So these are a few things which I have to be careful about whenever I am going for deciding where the money will come from. Short-term sources can be cheap, but then there is a possibility of having a higher risk. Why? If you talk about the short-term sources of finance, you have options like an overdraft. Guys, is there any sort of risk that is attached with overdraft when it comes to the party who's taking the loan? What is the duration within which a company has to repay the overdraft? Yes, absolutely. The company has to repay the overdraft on demand. That means the bank can anytime ask the company to pay up. So if let's suppose you are using the overdraft and then suddenly the bank has told you to return that money back. So if you have to return that money back to the bank, how are you going to use it for your own company? So that is why we say that the short-term sources of finance may be cheaper, but then they come with a higher risk, and then long term may be more expensive. Yes, Sitanshu is right, there are variable rates also that you have to pay over overdraft, so that makes it more risky. So that is why we have to consider the costs as well. And then the third thing that you can talk about is maybe how the different kind of policies that you people can use. There are two kinds of policies mainly. If you talk about the extremes, the two kinds of policies are aggressive and conservative. In an aggressive policy, firstly you can start off maybe with a matching policy. You can explain about how it ideally should be done. So matching policy should be followed ideally. What do we do in matching policy? Where do I finance my permanent current assets from? Long term.
Long
And where do I finance my short term or the fluctuating assets from? The short term sources. So this is how you can say that the ideal scenario for the business should be the matching policy. And then depending upon the risk appetite of the management, they can choose between the different kinds of financing strategies. So you can say that what are the different types of financing policies. So the business can choose between aggressive and conservative approach. So an aggressive person is the one who likes taking risk or does not like taking risk. Aggressive person likes taking risk, and in exchange for that, what do they want to be compensated with? If you're taking more risk, then you want more return. So for more return, what do you want to do with the costs? If you want the returns to be higher, cost should be more or cost should be lesser?
No.
Cost should be minimized, then only profits will be maximum. So if I want to minimize the costs, where would I want to get the money from? Which source, long term or short term? Which source is cheaper? Short term is cheaper, so I will prefer to bring lots of money from the short term sources. Ideally, the matching policy tells me that I can bring my fluctuating current assets from short term sources. But now, since I'm an aggressive person, what I'll do is, if not all of the permanent assets, at least some of the permanent assets, I will try to finance using the short term sources. So this is what we do under an aggressive policy. Now, who will tell me about the conservative policy? What do we want to do in conservative policy? More risk or less risk? Less risk. So if I want to take lesser risk, will I be getting more return or lesser return? Lesser return, absolutely right. That means my cost will be more or high. My cost will be more or less. My cost will be more. So which source is more expensive, long-term or short-term debt? Long-term sources are more expensive. So rather than using my, if I talk about the matching policy, permanent assets I have to use using the long-term sources. But if I talk about the fluctuating assets, if not all fluctuating, at least some of the fluctuating ones, I will still go ahead and get it from the long-term sources of finance, just because I'm a conservative person, just because I do not like taking any risks. So I do not want to face that risk that, just because for the sake of making a little bit more profits, I'm playing it very risky. I don't want that. So then I will be going ahead with a conservative funding policy. So these are a few main points. And then one more point that you can discuss is probably about the other key factors. So the other key factors can be about, these can be 2 points also, Bhargav. If you want to split it, that's totally fine. Other key factors, you could talk about the risk appetite of the management. risk appetite, and then you can talk about some of the industry factors, that how things are working in the industry where the business is operating. So you can give examples also over here. If you talk about the airline industries, even though the aircrafts are something which they are using on a day-to-day basis, the aircrafts, do people usually know how do these companies get their aircrafts? Do airlines own these aircrafts on their own? Are they the owners of those assets?
Leasing.
Yes, they get it over long-term leasing. So long-term leasing is usually used. That is how things work in the aviation industry. And you're absolutely right. Government policy can also play a part, depending upon how the interest rates are structured in my economy. Maybe if I live in an economy where the interest yield curve is inverted, usually how does your interest yield curve shape? Is it upward sloping or is it downward sloping? The normal yield
Upward.
curve. Upward sloping. Why? Because the more the duration, more will be the interest. But if in some economy, for some reason, the interest curve, the yield curve is downward sloping, then the opposite is going to be happening. Long-term debt will be cheaper, short-term debt will be more expensive. So then the strategy of the business will change accordingly. So depending upon other factors also, the business will have to decide which funding strategy are they going to use for their working capital. So these are a few things that you can explain over here. I think the exact answer for this is also there in the theory document which I've shared with you people. So I really hope that with barely, I would just say the 10 days are remaining, because once the Monday from where the exams begin, the first week of December, those are the days you should not really even count in your preparation. You now just have 10 days to get all the practice that you people need, that you people want to have, so that the last week can be used fruitfully for your revision, for any of the last minute questions that you have circled for yourselves, that these are the ones where we got stuck, and any of your theoretical revisions. So keep that time a little bit for, not very hectic. Do all of the hard work in the 10 days that are remaining from now onwards. So this is how we can frame our answer for the part B. If you have any queries, you people can let me know. Otherwise, this is where we will stop for today. In case you do not have any queries, then you are free to go. Good night. Keep practicing. I'll see you in the next session. Okay, yeah, go ahead, Abdul Rahman. What is your doubt?
हेलो मैम। मैम, मुझे थोड़ा सा मसला इस एग्जाम स्ट्रेटेजी की वजह से और प्रिपरेशन की वजह से मैंने मेरा भी मेन फोकस जो है वो फिलहाल क्या कहते हैं, टेस्ट सीरीज है बेसिकली, जो टेस्ट जो हो रहे हैं, लेकिन स्टिल टेस्ट में प्रॉपरली इतने अच्छा स्कोर नहीं हो पा रहा। ऑल्दो मैं क्या कहते हैं स्टडी हब भी साथ साथ कर रहा हूँ। स्टडी हब के क्वेश्चन जो एमसीक्यूज और एमटीक्यूज हैं वो भी मैं कोशिश कर रहा हूँ कि मैं साथ साथ पूरे करूँ, लेकिन स्टिल थोड़ा बहुत लैग कर रहा है। मतलब मैंने एक्सपेक्ट किया था, जैसे अभी वर्किंग कैपिटल का था तो उसमें मुझे कैश मैनेजमेंट वाला पार्ट मुझे इतना अच्छा नहीं आता था, लेकिन स्टिल वो क्वेश्चन मैंने बहुत पहले किया था तो वो मुझे थोड़ा बहुत कॉन्सेप्ट समझ में आया हुआ था तो वो मैंने कर लिया था। लेकिन जैसे यू क्यू वाला जो था उसमें मैंने बहुत बहुत बेहतर कर लिया था, लेकिन still जो स्कोर था वो मुझे एक्सपेक्ट नहीं करा था। तो
ठीक है।
मेन चीज़ ये कि जो भी क्या कहते हैं स्कोर रहा पिछले टेस्ट में भी और इन टेस्ट में भी, उसमें आपने रिकमेंड किया कि प्रैक्टिस जो है वो दोबारा और अच्छे से, थोड़ी सी अच्छी सी। तो मुझे ये पूछना है कि एक तो प्रैक्टिस करूं कैसे, मतलब लाइक अभी तो टाइम ही नहीं है, जो नेक्स्ट टेस्ट है उसके लिए उसकी भी प्रिपरेशन करनी है, प्लस आपने थ्योरी वाला पार्ट भी, थ्योरी वाला वो भी दिया हुआ है, क्या कहते हैं,
डॉक्यूमेंट।
हैंड आउट। तो वो भी मैंने अभी प्रॉपरली देखा नहीं है, वो भी मैंने बोला था कि मैं करूंगा, लेकिन ये टेस्ट के उसमें ही मैं इतना ज़्यादा इन्वॉल्व हो गया। तो वो चीज़, और क्या कहते हैं, ये जो बेसिकली जो नए टेस्ट जो आ रहे हैं उसकी वजह से पुराने टेस्ट का जो भी स्कोर रहा है वो कैसे मैं बेटर करूँ?
So, answering about what you're saying for the tests, so it is the test जो मैंने आपके लिए prepare किया as a part of the test series. I have deliberately set the level at such a place that you people get a good practice. I have deliberately kept the level as close to the exam level or even slightly higher to the exam level because I want you people to have that practice in the preparation stage only so that it does not sound very alien to you in your final exam. When you see something easier than what you've done in your practice, you get more confident, you feel more confident that yes, I know the things. So firstly, I would tell that to you that the tests are completely set, keeping this thing in mind that I want to keep it this way for you so that you don't end up scoring good marks in those tests, so that you keep on working further on your practice. Now, talking about how you should be using the remaining days that you have now. I am assuming that if you are, preparing for the December attempt, at least you will be spending in 4 to 5 hours on a day-to-day basis. So how you should be dividing your 4 to 5 hours of your preparation each day should be, if you are still left with your BPP kit and the Kaplan kit, BPP kit and the study hub, majority of the time should be going ahead to finish those two resources which I told you were the most crucial ones to prepare for your exam. Then maybe around half an hour or 1 hour can be used over the previous tests where the mistakes you work upon, whatever mistakes you had made in the previous test, you can work to rectify those mistakes. And then 1 hour approximately can be used. Now, I think you people are, after working capital test is done, you people are only left with the last test, which is about the risk management. So 1 hour you can practice about the risk management. Mainly, if I talk about that area of the syllabus, it gets tested in section B of your paper. So practice as many section B type of questions that you can do for the risk management area. 1 hour can be utilized for that. So main focus should be on the two resources which I told you were non-negotiable, and then any remaining time can be utilized for the corrections as well as the preparation of the next test. Okay, you can submit those tests now, Yashu. I'll try and evaluate them for you now. Theory document I'll share again on the group, Hitanshu. I've shared it multiple times over the WhatsApp group. I'll share it again. Yes, Shafika?
Ma'am, you know that you said like for objective type questions, even like one option is correct and another option is wrong, I may lose the full mark, right?
Yes.
Yeah, so does it apply like even in section B, we are getting objective type questions, right, under each subsection? It applies to that also?
Yes, it does. Just in section C, you will be given marks using the own figure rule because it is human marked. Section A and B are completely computer marked. So whatever is fed to the computer, if your answer matches, you get the marks. If it does not match, even if one part is matching, another is not matching, the computer basically looks for a complete match. So if your answer is not a complete match, you get a 0, no matter if one or two of your statements were correct or not. So in section C, definitely you get the marks basis the own figure rule. So that means if you've lost marks in one requirement because of one mistake, and then you've used that same number in the second part. So if you use that same number in the second part, it will be assumed that that number that you've carried forward from the first part is correct. You'll only lose marks once in the first part. Any calculations that you do further using that number will be marked as correct, provided you've used that figure correctly. That means the further calculations that you've done, if those are correct, then you will be getting the marks. Marks won't be deducted again for the same mistake.
Okay, ma'am. But in section B, there is like for one question, there'll be like 5 sub questions, right? So it is independent, right? Like it is not like if I answer one wrong, it can't like the whole question
No,
will
no.
not mark.
No. They are
Okay.
all based on the same case study, but they
Yeah,
are
yeah.
different questions.
Yeah,
Yes.
yeah. Okay. Thank you.
But I have to revise concepts by recorded videos and it's taking more time. So should I do or just focus more on BPP and Study Hub sums? With respect to practice, these are the two most essential ones, Study Hub or BPP. Yashu, to answer your question also simultaneously, there's no priority when it comes to these two resources. They are equally important. They are both placed at the same level of importance. Please ensure that both of the resources are fully completed. And Hitanshu, again, regarding the revision, you people have multiple options. I have given you separate revisions also over the portal. I have also uploaded YouTube videos where the chapter-wise revisions are there as per the Study Hub referencing. So whatever ones which you feel are better for you, you're able to work quicker on them. You can use those for revision, and the remainder of the time should be going for the practice.
मैम बेसिकली जो आपने जो सजेस्ट किया वो उसको समराइज करें तो आपने यही किया है कि एक डे में जो जो चीज़ें हैं उनको एक से 2 घंटे देने हैं, लाइक मिसाल के तौर पे बीपीबी और स्टडी हब है तो उसको 1 से 2 घंटे देने, और बाकी जो टेस्ट सीरीज है, जो रिमेनिंग टाइम है, वो टेस्ट सीरीज को देना है.
Right.
ओके ओके ठीक है, थैंक यू.
Any chapters to prioritize? So I'll tell you, if I talk about the usual pattern, now I'm not saying that the examiner will never deviate from it, but from my experience, what I've been seeing that this pattern has been repeating. If I talk about section A of the paper, there is no predictability with respect to section A because clearly in the syllabus document, they are mentioning that syllabus areas like any and every question of your section A can be from any and every syllabus area that you have as a part of the FM syllabus. Now, when it comes to section B, we have some sort of predictability. Business valuation, risk management. These are the two areas which I see most often getting tested in section B of your paper. Then if I talk about section C, these are three areas which the usually examiner plays around with. Out of these three, two will appear in the section C of your paper. One is going to be the investment appraisal unit, where you have NPV, IRR, and so on and so forth, payback period and all, sensitivity analysis. Second is that you have the cost of capital. So here they can ask you about the weighted average cost of capital, finding about the cost of capital of equity, cost of capital of debt, all of these sorts of questions. And then the third variety that they include over here is the working capital. These are what the examiners usually test you upon. I cannot say that this is for sure going to be the case in your exam also. If, let's suppose, fingers crossed, the examiner does not wish to experiment, they are going to stick to this pattern. But just in case they experiment, then sky is the limit. They can do anything and everything. Usually in the PM paper, I do not have this much level of predictability also because the examiner are not repeating the patterns anymore in PM. But so far in FM, we have been fortunate or unfortunate enough that they keep on sticking to these patterns. Let's hope that these patterns remain same for you also. But at the same time, when I say that, I would require you people to be prepared for each and every scenario. Prepare for the worst case scenario. You've heard about Murphy's Law. Whatever can go wrong will go wrong. So assume that and prepare yourself in such a good manner that no matter what the examiner throws at you, you're able to answer that very well. And you're able to not just get those 50 marks that you need for clearing your paper. You go way beyond that and you give me a rank holder, right? I would really appreciate. It will be an achievement for you also, and it will be an achievement for me also that, we end up scoring a rank together. So these are a few areas that I told you people you can focus a little bit more upon, but I would not say that the other areas are to be ignored. Every area of your syllabus is extremely important. And it says section B questions are really tricky. That only gets better with practice. There's no other solution to that. Only practice, practice, and practice. If your concepts are rock solid, then practice will be the only thing that you need to be able to get to a good score in your exam. Yes, Abdur?
मैम आपने मुझे बताया था, मैं शायद भूल गया भी, क्या कहते हैं, जो भी टेस्ट सीरीज में जो भी स्कोर कम रहा है तो उसको बेहतर कैसे करें?
उसके लिए आप सॉल्यूशंस देखो, मैंने सारे सॉल्यूशंस अपलोड किए पोर्टल पे. यू हैव द debrief videos. So wherever part you have lost marks, whichever requirement you've lost marks, revisit the solution for that, revisit the debrief video for that, and you'll be able to rectify the mistake that you've done. Okay. Yasha is asking, the PDF of that theory is enough for the theoretical questions. So I would not say that that is 100% comprehensive of all what you need, but that theory document is going to prepare you, even if, let's suppose, you don't get an exact 100% match of question in your exam. The document that you're preparing, this will help you answer other questions also. So the knowledge that you will retain by going through the statement, that document again and again, it will help you frame other answers also. So all in all, it will be a very helpful document for you people. Every attempt I share this document with the students, and when the exam is done, they come back and they tell me that thank you for sharing this, because one question was exactly the same in our exam, two questions were exactly the same in our exam. So this keeps on happening. I'm not giving you any sort of guarantee that this will for sure happen for your exam also, but this is what has been happening. I've compiled this document by compiling all of the past papers, the repeated questions which are time and again asked by the examiners again and again. Those questions have been compiled, and the answers also are the ones which are ACCA recommended. I have not drafted those answers. Those are ACCA examiner answers. So you prepare yourself in a manner that whatever examiner throws at you, if it's the same one, bang on, it'll be great. But even if it is something different, you will still be able to tackle those questions because you have that knowledge, you have that jargon in your mind. Okay. All right. Anything else, guys?
मैम वो थ्योरी पीडीएफ में से मुझे एक आंसर मुझे समझ में नहीं आ रहा था.
Okay, so I'll take that up the next time that we meet, Bhargav. You can highlight the page and share it with me. If possible, I'll resolve it over a voice note. I actually have to go somewhere, so I'll take that up the next session.
Okay, ma'am, no problem. Ma'am, I will ping you on WhatsApp, personal chat or on group.
You can put it on the group itself.
Okay, no problem.
Yeah.
No problem. Thank you, ma'am.
Okay. All good, guys, now? Perfect. I'll see you people the next time. Keep practicing, keep revising. I wish you all the very best. Do reach out to me if you face any difficulties. Bye-bye. Good night.